Hello, everybody. Thank you so much for joining us. We are starting the first of our speaker series at Modern Ventures here, and we have one of the most iconic players in all of real estate with us, Sam Zell. Thank you so much for joining us, Sam.
My pleasure.
So Sam really needs no intro or bio, but I will give a short one anyway. He's the chairman of Equity Group Investments. He's a global investor in real estate, in industry-agnostic entrepreneur and investor. A track record of both being, starting new companies as well as turning around troubled companies, assets, leading consolidations, and bringing companies to public markets. He is also, very active while he's had a very long real estate career. He's also very active in the startup space and entrepreneurship as well. So we'll talk a little bit about that. And, for those of you who haven't read it, I highly recommend everyone to read the book he wrote, Am I Being Too Subtle? I find it something that I learned a lot from, and anyone out there as an entrepreneur or an investor can also learn a lot from as well. So thank you so much for being with us, Sam. The goal of today is to, my goodness, we have had so much going on in the world, from, political riots to, to global pandemics to, the market high, the market low, oh my. So one of the things that I think that everyone listening can benefit a lot from is just sort of understanding, you've been through some of this before, not all of it has existed, but what's your view on sort of the real estate industry, the future at large? I mean, how do you think all of this craziness in 2020 and into 2021, affects our world? I'd love to hear your views.
Well, I think I would begin by saying that I believe that the world has been urbanizing for maybe 5,000 years. And this is not the first pandemic, and it's not the last pandemic. Despite anything else, history says that urbanization will continue. So I think that all of this conversation about work from home and changing modern motivations and things like that are relatively typical of whenever anything is going on, people take it to extreme. I think there's no question that the real estate industry has been affected by the pandemic, and there will be changes in the future, but nowhere near as extreme as some of the people have suggested. As an example, obviously retail is kind of like a falling knife. We don't know where the bottom is. What we do know is that the pandemic has for sure accelerated online usage all over the world. So the best way to kind of look at it is that I think that right now we're probably, in 2026 of what was expected in terms of online activity. And that obviously is creating challenges and opportunity with the existing retail space. I think it's particularly so in the United States, where we have historically had an oversupply of retail. I think historically, it's been like there's been 5 square feet of retail in the US for every 1 square foot of retail, say, in Europe. So the ability to shrink that becomes much easier when there's a significant supply of it. Do I think that we have seen the last of stores where people will go shop? No. Do I think people still want to see the merchandise and maybe want to feel the merchandise, and therefore there's a role for that? Absolutely. Do I think the role will be as significant as it was in the past? No, I don't think so. And I think therefore there will be, and as I said, I called it a falling knife, but I think that, we don't know exactly how much retail we need, but less than we have today. In the office space arena, there's been a lot of discussion about work from home and how office usage is going to be very different in the future than it was in the past. I'm very skeptical of those kinds of opinions. I employ a lot of people. I haven't figured out how to motivate by modem. I haven't figured out how to evaluate people on Zoom. I haven't been able to figure out how to assess people's capabilities based on periodic intervention established versus what I call the water cooler idea, sharing, etc. I think we are social animals, and as social animals, we actually very much represent 1 + 1 = 3. And I think we have historically gotten benefit from interfacing with each other, and I can't see that changing going forward. In the same manner, we've seen a very significant move to the suburbs. And the question is, have we seen the end of the CBDs? And again, I think people have taken kind of extreme views that are unsubstantiated by experience or reality. First of all, in terms of the movement to the suburbs, we need to take into consideration perhaps the single biggest demographic issue of our generation, and that's the deferral of marriage. And the deferral of marriage has led to deferral of having children. So we ended up with a lot of people in the CBD who in previous generations had already moved out because they wanted grass for their kids, who are in effect saying, well, I'll wait till I'm 30 something to deal with that. And all of a sudden the pandemic came up, and that was a great motivation to take steps that I think would have happened in any event. So I think that, yes, there's a lot of question about whether commuting is, effective, yes, or productive. I think, we'd like to pretend that commuting is over. The reality is that commuting is the process by which people get together. And I don't see anything in the horizon that's likely to change, quote unquote, people getting together. In the office space arena, again, people have talked about, we need so much less office space. But I think that they're not really recognizing what's really been going on in the office space market. The creation of office sharing and the creation of companies like WeWork resulted in, commitments to take space that were unrelated to demand from users. But by virtue of them making those commitments, and WeWork was the largest tenant in New York City, largest tenant in London, largest tenant in San Francisco, but that didn't mean they had the tenants to fill that space. But from a statistical point of view, the statistics said that we had more space leased. That led to the creation of more supply. And I think the issue on the office space situation is that we have a significant oversupply. Here in Chicago, as an example, we have 5 million square foot brand new buildings. I promise you, without WeWork and similar office sharing utilizations, they never would have been able to finance the creation of those 5 buildings. Now those 5 buildings are creating, LaSalle Street, where you could shoot somebody and you have no risk of hitting anybody, no risk at all. So I guess my concern is that The problem is still the same. There's too much office space. But I think we have to understand why the problem exists and not attribute it to this time is different, which frankly, I don't think is the case. In other areas of real estate, obviously the hospitality space has been very much affected by COVID. We're seeing an enormous number of hotels close, and I think it's very unlikely, that all of them will reopen again. And I think some of them have already been converted to residential. In some markets, they've taken the very low-end hotels and turned them into homeless occupancy. But I think the answer is that the overall demand for hotel space, at least until traveling begins again, is likely to be diminished. Having said that, I don't think the days of conventions are over. I don't think the days of sales calls are over. I like to tell people that everybody is going to make a sales call on Zoom until some young whippersnapper says, if I got on a plane and sat across from the guy, I got a better chance of making the deal. And so he's going to get on a plane and he's going to sit across from the guy, and the guy is going to say, well, if this guy is this interested, I'll give him the deal. And once he gets that deal, then everybody else gets off Zoom and gets off their ass and goes back to, quote, selling. And, one of the greatest lies in the world is build a better mousetrap and they'll come to it. That's really not true. Nothing is bought. Everything is sold. And those of us, whether it be in high tech or any other field, have learned success by recognizing the fact that it's got to be sold. Now, obviously, there are other asset classes. The flavor of the month right now is industrial and distribution facilities. Amazon is quickly becoming one of the biggest, users of space in the country. I would guess, however, that we're likely to see an oversupply in that arena if we don't have one already. Think about the fact that when I first started in the real estate business 50 years ago, the industrial distribution space was primarily owned by the insurance companies. Now, entrepreneurialism and insurance companies is the ultimate oxymoron. But the reality was that, as opposed to the complexity of building single family, building multifamily, or building hotels, or building retail, nothing is in real estate is as simple as building a box. And so, and instead of multi-tenants, you had a few tenants. So the insurance companies were able to be the entrepreneurs in that space and succeed in doing it. And therefore, at the same time, creating long-term real estate assets that fit into their a mix of risks. But I think that if anything, I'm kind of expecting probably an oversupply, if it isn't here already, simply because there are the ability to build doesn't diminish with a pandemic, but the ability to create demand and tenancy does. And so you have a crowding of real estate developers into arenas that are working. Overall, I would say that real estate is an asset class that's not going away. I don't think it's being quote unquote redone in major fashion. But we're seeing, just like the stock market runs, has allocations from, value to growth to various other things, real estate is changing as well. There'd be a lot of questions, okay? And, as an example, what are we going to do with all the movie theaters in the United States? It seems to me that streaming, as it is a successful disruption, and we all of a sudden have these spaces that are obviously single purpose, that are going to both be a challenge from a real estate point of view and probably create opportunities. I don't know what those opportunities are. I don't know how people are going to quote unquote answer them. But that kind of change is going to happen. We're going to have a lot of other retail space. Now, the argument has been, well, you don't have to worry about the retail because the retail always got the best corner. But, you can have a surplus of best corners.
Yeah. All around Chicago.
And by the way, we haven't even talked about gasoline stations, as another form of disruption. And I read some pretty, interesting things about what the gas stations of the future are going to be. But if in fact we have an electric car revolution, as some people suggest, the whole back office of the gas station changes, because the electric car is so much simpler. Selling gas is one thing, selling electricity is another. You don't have the option of having gas in your garage, a gas pump in your garage, but you sure as hell have the opportunity to have electricity in your garage. So I think that these are all changes as our society evolves, as we take better care of the climate, as we wean ourselves off of fossil fuels. Those are all going to have impact, and real estate is in the center of most business activity. And like everything else, it's going to come down to, how aware are we? How good are we as being observers? How well can we adjust to the potential risks?
Thank you, Sam. And I think that, every entrepreneur sees with great change, there can be great opportunity. And so you've started a new group, Equity Distribution Acquisitions Corp., presumably because you see opportunity. Can you talk a little bit about that?
Sure. I think it was maybe 10 years ago, or maybe even longer than that, somebody came up with the idea of creating a SPAC, which is a special acquisition corporation. And the theory was that you would raise a certain amount of money. The money would be undefined as to what its use would be. Upon completion of the raising of the money, you would effectively have a blank check company, or a company that was public with capital, but no defined business. Generally speaking, it was a real backwater of the financial world. It was, as is often the case, it was populated by a lot of people in, let's say, who were not in the leaders in the private equity business or anything else, and generally speaking, did very poorly. Fast forward to 2020, all of a sudden, everybody began to focus on these blank check corporations as a way of basically, another way of going public, but maybe in a much more attractive fashion, and maybe much cheaper fashion.
Yeah, in fact, we have a company that was a proud beneficiary of this. We rang the bell on Christmas Eve with our company Porch, which was through a SPAC IPO.
And you put, and so, I mean, the answer is that it's creating a lot of opportunity. It's creating a lot of capital ready to be invested. We've now, over the last 10 years, seen a dramatic reduction in the number of public companies as they've been taken public. And what we're now seeing, in my opinion, is the beginning of that cycle reversing itself. Just like, I think it was 2 years ago, there were, an unlimited number of unicorns that were high-tech companies with, in excess of $1 billion valuation. And they just, sat there and kept raising more money and changing the value, but without, suffering through, price discovery. And then WeWork turned that all upside down. WeWork's last round of venture capital was, I don't know, 46 billion, and they couldn't take it public at 5 billion.
Yeah.
So all of a sudden, all of the unicorns are starting to go public as they begin to realize that without price discovery, they had no liquidity and no value.
Yeah.
So we created a SPAC because we felt that there were opportunities out there, number one. Number two, as an entity, EGI has been an investor in and been responsible for identifying companies and creating opportunities. And the SPAC was just another arrow in our quiver of ways in which to use capital to create positive results.
Is there a specific theme you're targeting?
Well, we called it distribution. Under the SPAC rules, you have an unbelievable flexibility in terms of defining what a word meant. So the reality is it's called equity distribution, but it's really equity opportunity. And we're going to basically hopefully find the right opportunity, and then we'll make it fit the word distribution.
Fair enough. Like every great entrepreneur, once again.
Well, am I being too subtle?
So one of the, perhaps distribution opportunities, but, I think the ways that, real estate has changed over the years, and if we think into the future, how it will continue to change, certainly by different technologies that have come into play. And I think when you think about the life cycle of a transaction, everything from, the acquisition to the disposition, and creating experience and creating a way that it's not just about the transaction for the end tenant or the end consumer, the end resident, but it's also around experience and how I live somewhere. And it's also about how I manage or I understand the asset or how I monetize on that asset. It doesn't necessarily need to be about just rent or commissions anymore. It can actually be about ancillary income and other services. I think that, sort of technology has kind of created limitless opportunity around an asset class that's been around for decades and primarily behaved the same way for centuries maybe. So how do you think about, the opportunities around technology? I guess first, how it's really changed the real estate landscape, and then secondly, where it can take it.
Well, instead of using the word technology, let's substitute that for the word information.
Yeah.
Because real estate, by definition, is an avocation that's spread out all over the place.
Yeah.
And what technology has brought to real estate is the ability to, in effect, change how information is conveyed and how it's used. We're still building apartments that people live in, and they have a bathroom and a kitchen and a living room and a bedroom.
And now a home office.
Or a home office, as the case might be. But the reality is the real implications of technology. Let me give you a couple of examples. Somebody came up with a technology called Parking Hero. Mm-hmm. Parking Hero is an app that basically gave a commuter the ability to assess the level of occupancy at varying parking garages in a downtown area. So all of a sudden, instead of, quote, being the lucky guy who got a monthly parking location, so he knew he had a place to park every day. Instead, that same commuter could look at the information and say, gee, there's parking available here, or there's parking available there. And the result has been, it's lowered the cost of parking to the user. Another example is that one of the oldest forms of real estate is single family rental. And it was always, the doctor or the lawyer or some local guy who bought a house and leased it out, and there was no quote opportunity for scale. And then technology came along and created the ability to rent space visually, the ability to monitor all kinds of maintenance remotely, et cetera, et cetera. So they've in effect created a whole industry of the rental of single family homes that didn't exist before. And it's now, you now have home builders that are actually building single family houses specifically for the rental market. So, I mean, those are examples of how technology has impacted real estate, and I think it will continue to do so, but it isn't going to change what real estate is. It's just going to improve the ability to use it.
And if you had, I guess, some big advice for, especially for, well, it doesn't really matter, the real estate entrepreneurs or otherwise, and what are the big takeaways? And I guess before you answer that question, I want to let the audience know they can feel free to use the Q&A to add any questions of their own that we'll get to. But back to my question to you, you are, again, one of, I think, one of the American dream entrepreneurs. You started from, self-built and have been so successful. And what advice do you give to people who want to be like you?
Well, if you talk to my wife, they wouldn't think that was such a bargain, but but I appreciate the compliment. But I think the answer is that real estate is real. Actually, I think business is really a very simple arena, and I think that as much as I'd like to tell you that my success has been because I've been so sophisticated, I think the reality is that my success has been directly related to the fact that I've, accepted pretty simple ideas. I mean, you sit on the board of something called ELS, which is the largest owner of mobile home parks in the United States. I was exposed to that asset class in 1984. As I didn't, and even though I was a major real estate player, I knew nothing about it. And I started studying it, and what I discovered was that this was a classic supply and demand situation, that effectively there was no new supply. And whenever you're in a situation where supply is limited, if you own existing assets, you're going to do really well. Well, we took that company public in 1993. It's been the #1 performer of all real estate investment trusts from 1993 to today. And it's really an extraordinary economic performance. But the reality is it's nothing more than supply and demand. If you got the supply and the demand is there and there's no ability to create new supply, it's very hard for you not to do well. In the same manner, I have a nickname called the grave dancer because I've bought so much distressed real estate. I could tell you that I, went through all kinds of esoteric analysis to make the decisions, but the reality is I just operated on a very simple premise. And that is that if I was able to buy assets at less than replacement cost, that was another form of supply and demand, because
Old silo so high.
anybody who was going to compete with me and create a new product had to compete with the fact that my cost of acquisition was significantly less.
Yeah.
Now, the answer is if you adopt what I call simple ideas like that and execute well, you have a great opportunity. If I were talking to a young kid today who was looking at real estate as a career, I'd say that the decision-making process is really, based on simple ideas and based on observation, and ultimately based on execution.
Mm-hmm.
The big difference in the last 50 years since I've been in the real estate business is that when I began, I was competing against a whole bunch of other people just like me. That was before the institutionalization of the investment of real estate investments. That has obviously changed. So today, to the extent that I'm using my own money to buy real estate, I have very few people that I'm competing with that are using their own money. And instead, I'm competing against people that are using institutional money. And so that creates a different kind of challenge. Institutions, by definition, act slowly. To the extent that you can deliver speed and certainty, you've got an opportunity to act in this kind of an institutional environment. So that's kind of the best way that I would advise somebody is not to try and come up with a new formula, so to speak, but sticking to simple ideas that when implemented and when executed well, produce, 1 + 1 = 3 and 4, as opposed to 1 + 1 = 2.
Yep. Great advice. All right, I'm going to be mindful of your time. I want to do one audience question, and then I want to end on your predictions of real estate as an asset class. So I think we have a good question. ESG has been a big topic, especially as of the last couple of years. And I'm really interested in your perspective on that. Is it hype? Is it real? Is it necessary? What do you think about in terms of the ESG?
I think that, ESG is the same as doing good. It represents, doing well. It represents being sensitive to the environment. It represents all of those things. But all of those things, frankly, are dependent on whether the basic premise makes sense.
Yep.
I promise you that if I built a new building and it was 100% ESG, but it was in the wrong location, it wouldn't matter.
Yep.
And so I think ESG is just another factor and a way of doing better. But in the end, is it the right location? Are you fulfilling demand? Are you satisfying what people really, really want? And then can you do it better? And I think ESG is an example of doing it better.
Great. All right, so the last question and where we'll end today is, what are your predictions on real estate as an asset class?
Well, I guess I think that sometime in 2021, it's likely that we will have vaccinated most of the Americans that want to get vaccinated. I think the extremes of the last 12 months are likely to abate. I think that, as I said, in certain areas of real estate, there's a lot of oversupply. But I don't think the world is changing. I don't think the cities are being eliminated. I don't think that Podunk, Iowa is now going to get very exciting. And I think that if you looked at where we were before the pandemic, I think it's very likely that we're going to return to a large extent to where we were before. Do I think that that change is going to be very rapid? No. I think that the biggest single issue for real estate is that I think the recovery is going to be slow and the adjustments are going to be slow. And, you know, if I were best guessing, I think something like, you know, 2023 and 2024 are much more likely to be returns to normalcy than, you know, any V-shaped recovery in 2021.
you. Thank you, Sam. I always learn from you, and
My pleasure.
I really
fun.
appreciate you sharing your views with our network, and really appreciate your time today.
Thank you.